Happy Saturday, traders. I take a bit of time out on the weekends to go over my trades and journal, reflect, um, process, etc. And while doing so, I thought it might be useful if anyone's interested in a top down analysis approach to your trading across a multi time frame basis to help you depict the best engineered charts for your day trading setups, then you might be interested in this video. And I'll try to make it relatively short, um, and informative along the way. So let's get into this. I have a couple of templates that I look at when I come into my day. I'm looking in the main at the indexes, metals, and oil, and I glance at the currencies if I can't find anything interesting within that matrix. What I've got here um, are two assets that we'll look at today. Silver, we'll just do a comparison, silver and the US 500. And I'm starting to draw conclusions from the get go, looking at these charts. These are daily charts, and we have an overlay of the Trend Predator Pro. The Trend Predator Pro is a um, bespoke indicator designed for this style of trading. And we're also looking at the Trend Predator fake out highlighter. This is version 2, this is version 1, this is version 2 under beta testing. It's got a few add-ons in the settings, notably an alert on the switch bars. Now, what we've got here also are the VWAPs monthly, weekly, and daily. When I came into the session on Friday, we had this scenario here. The fake out high bar um, was the result of Friday's trading. So if we just go into replay mode, so if we compare the two charts, first of all, we'll analyze silver. Silver is in breakout. And additionally, silver had actually reached a target, an upside target, um, in a parabolic higher time frame channel to all-time highs. Now, despite still being front side, we're on the back side of the week. And with a market that's closed in breakout, with 3L on the Trend Predator Pro here, um, monthly, weekly, and daily, what does that mean? 3L stands for three longs. So three consecutive of breakout closes long. So just here on the daily chart, we can count about 1, 2, 3. Okay. This is at least 3 days of consecutive breakouts to the upside. If we go to a monthly chart, we can see that we've got at least 3 months of consecutive breakout, far more than that. Anyhow, we only want to go on 3. 3 is good enough. If you can count to 3, you can make a lot of money. So we've got multiple time frames in breakout to the upside and potentially toppy. And given that we've already hit predetermined upside targets, we can be of the mind that there are prospects of a trend trade on a Friday or a reversal trade on a Friday, the back end of the week. We don't know yet which way it's going to turn out. Now, by comparison, if we look at um, the US 500, we had this massive switch bar printed last Friday, a week ago, and followed by a market that is essentially coiled. You would argue that's a broadening formation um, with prospects of upside, so we can draw that on. But overall, in fact, when we came into that day, it was like this, wasn't it? Okay. Okay, that was the day, and then by the time we'd come in on Friday, we'd already seen a low in London, and then we were moving back up into the range. So indeed, there were prospects of a move higher. Okay, but overall, which would be the most ideal chart to be trading? Probably silver, because it's closed in breakout. We haven't got this massive breakdown from last Friday. We're not coiling, and this can go anywhere. When you're inside of that big range, it's a 50-50 coin flip, isn't it? Whereas with this, you can argue that it's either decisively going to continue higher or it's decisively going to come back inside and reverse. Well, this can just chop and go sideways on a fractal basis. Okay, so this is the first glance at the market, and then I move over to and I draw my conclusions, start writing them up. So in conclusion here, with the US 500, we've had that huge pullback, um, and it's just ranging coiling, right? Okay, so let's go over to where I would look next. We come out of replay mode and move over to a different template. Okay, so these are the um, days for which are coiling on the US 500. Horrible choppy market. And then here we have a much cleaner out of balance market to the upside on silver. And what I'm looking at here, first of all, is how, let's go into replay mode. So before the breakdown, what I'm looking at here is how is the day now set up? What's occurring over the week and the day? Well, here's the weekly profile. This is that week's profile last week. It's now Saturday. So the current week's profile if I'm trading on Friday. And what we can see immediately is that the price is being accepted back inside of the value area. And moreover, it's actually taking out this high volume node, and there's a wide open space for that to travel through. Zooming in, we can see that the price has broken down outside of where otherwise the price would be expected to climb higher. So it's broken down its profile, it's in breakdown, and it's also taking out the point of control from the prior day, accepted inside of its value area high. So this is all very compelling stuff for a downside continuation. And our target could be the previous week's low, the point of control from the current week. And we also have a signal day, the inside day. The thesis is if we come back inside, then we could rotate all the way back through to visit stops on the other side of the inside day. And if we compare that to the US 500, let's go into replay mode over here. At the time of the opening range, what did we have? We had a market, the same process. Well, we talked about prospects of a continuation up, broadening formation. But look at the volume profile. We're battling against a volume profile where the price is contained within it. And I'm not seeing much space for a continuation through it. In fact, we've got, is that the point of control? Where's the point of control? It was all the way up there. Okay, but we've got the high volume node here. So if we pull that across as a potential resistance, let's have a look over here. Bear with me. There we go. Mark that red for resistance. Okay. And we're potentially breaking up through that secondary higher volume node. But that there is not as attractive, or not much of a wide open space, as it were, compared to over here. So which of the two profiles is more attractive? The situation in silver is far more compelling than it is with the S&P, as an example. And if we break it down even further, we've got the value area low from the prior day's resistance. We have a um, we have the belly of the B formation as a potential resistance from the prior day's Wall Street as well. So all of this here is not looking too promising. Not to say that it has to abide by what I'm saying, but there are less prospects of a high probable trade setup compared with silver for the downside continuation. And as you can see, silver just ripped through um, the wide open space right into the high volume node, the point of control from that week, to the tick pretty much, rebounded and then rolled over again. So you got two cracks at the whip there, the breakdown, the immediate breakdown, and then the rebound continuation trade. Whereas with the S&P, moving forward, see how it got resisted right in that zone that we're talking about. And then it later went on to have a second attempt, and it did actually manage to push through. But I'm here looking for the higher probable trade setups that will result in a parabolic day trading outcome. So silver was the preference over the S&P. And what we'll do now is we'll go into my trading template on both pairs, and we'll see how that would have panned out. So over here, using the Trend Predator Pro as our satellite navigation, our trading companion, to help us arrive at a thesis, we had a market by the time I'm coming into my trading window at 10 a.m. that was a first red 8-hour template. So following consecutive 8-hour upsides, longs, breakouts, we had a first red close on the session. Each 8-hour is a session. So that's London breaking down, closing red. The assumption, therefore, is that we can have a continuation. We had 3L on the daily, the weekly, and the monthly chart. That is implying that we've got prospects of a toppy market. We've got a fake out high on the daily chart. We've taken out the prior day's highs and come back inside. That's a failure. We've got a broken down situation on the sessions. We've broken down below London and below Asia. You've got this beautiful topping pattern up top, trap traders, high bulls getting trapped. And being a Friday, we can anticipate continuation moves all the way back into the start of the week's length to round off the week. So how did that pan out? Well, those that were aggressive got in, well, in the community I trade within, took that off the bat, targeting a range expansion to the downside. There's a 100% range expansion there within the first, minute, I think it was. It got straight to target. First few minutes. And then those like myself waited for further confirmation because we were trading into the prior day's low as a potential resistance, as well as there was something on the TPO chart as well, which I'm not going to get into, that could have been a support. So the prior day's low is support, not resistance, I said a moment ago. So I was waiting for the pullback, which is pretty typical behavior of a breakdown of a daily low. So breakdown, pull back. Um, there was an entry to go short here, fake out high, or if you were more prudent, which I should have been, you would have waited for the switch bar as confirmation, um, with less risk of a pullback. Therefore, you could be more aggressive with your stop loss, targeting the 200% range expansion or even the 300% range expansion, and see how you get on and react accordingly to the price action and timings of the day to how you want to manage that trade. But fantastic outcome either way. Even if you were just targeting there the 200% range expansion, you're still tripling your R. And then over here, if we go into playback mode, why isn't that working? Or it is working, I don't know what's going on. Not on the right chart, perhaps. Is that why? Why can't I go into playback mode? Over here, there we go. Over here, we had an equally, well, I wouldn't say equally, but we had an opportunity here to be going long. Um, what I would say is that we had this nice switch bar and follow through, but straight into resistance. Nevertheless, if you're taking that, um, also here it's looking relatively good for an ABC breakout continuation. Nice fake out low bar over here off the closing price, breaking back above the London session high for a long, but you're trading into resistance. So that might not have been the best idea, depending on where you want to put your stop loss. But if you're looking for an aggressive outcome, then your stop loss is, well, if we get it, see the VWAP's all the way down here as well. Let's just put it there for argument's sake to speed things up. A 2-for-1 prospect that would not have worked out on first attempt. But if you were patient to hold on for the rest of the day and monitored the behavior of price at certain timings of the day and levels, then you might have been inclined to note that this was a opportunity to go long, breaking out of the downtrend in line with a 2-star opportunity. Still fake out low on the day, breakouts on the 8-hour chart, all looking rather bullish, to be taken out on the breakout of the London highs again, attempting to go once again, targeting a 100% range expansion, stop in below that VWAP perhaps, taking on that bar there, 11:45, new timing rotation. Not sure how this one panned out. I think this continued higher, just about. Okay, so anyway, not the sort of trade that I want to be in. Sitting through all of that all day long. I'd much rather have taken that and be done. All right, so I don't know if that was insightful for anyone. Um, if you've made it this far and you would like to reach out and connect, collaborate, we could bash heads, come up with some ideas on how we could work together. That would be great. Alrighty, have a good weekend or day, evening, wherever you are in the world, whatever day it is that you're watching this. Cheers.